And Indian stocks turned volatile despite Monday being the D-Day for the start of the government's new GST cuts to key consumer goods. Tech stocks in particular were under pressure as US President Trump's hefty fee for new H-1B visas is expected to lead to operational difficulties for outsourcing giants. Trump's order on Friday requires a $100,000 fee for new H-1B applications. That will hurt the margins of Indian outsourcers who use the H-1B program to deploy engineers to client sites. The fee is likely to disrupt projects of outsourcing companies like Tata Consultancy Services, Wipro and Infosys that drive a large chunk of revenue from the United States. India's $280 billion tech services sector is already grappling with sluggish growth. Customers have cut back on technology spending due to geopolitical tensions and Trump's tariffs. The H-1B change is another blow and puts Indian tech giants' business models at risk. Toshi Jain from JP Morgan said the relative price of hiring workers on H-1B visas is expected to increase meaningfully and added that this is likely to force employers to increase the ratio of offshoring, nearshoring to onshoring and substitute H-1B workers with local workers for onshored workers. The higher fee is likely to push Indian tech firms to increase offshore projects and rework their business models. Tech firms have already steadily pared back their dependence on H-1B visas since Trump threatened to raise immigration barriers in his first term. A bulk of projects were done remotely at the height of coronavirus pandemic. All major tech companies have also stepped up local hiring and have ramped up so-called delivery centers in the US to service clients. Bloomberg intelligence analysts Anurag Rana and Andrew Girard said that the companies will be forced to redesign their pricing plans to either offer an expensive onshore consulting model or a much cheaper offshore program where most of the work will be done outside of the United States. The tech services sector has already taken a hit from disappointing earnings from the June quarter. The resultant layoff plans by Bellwether TCS and other big firms have added to the gloomy mood. A gauge tracking this sector is down more than 15% so far this year, compared to 7% gain in the broader Nifty index. The other industries in the red this year are real estate, media, pharma and FMCG sectors. However, FMCG businesses are expected to gain from the government's GST cuts with improved outlook from a boost to demand. For now, the H-1B visa fee news is overshadowing the benefits and the boost from GST cuts. For latest news, download the WION app and subscribe to our YouTube channel.